Hello, everyone. Third time. Hopefully, this is sort of working. I at least get some comments in Ecamm this time, although people's pictures aren't there. You see no pictures, but we have comments. Good afternoon, Sashi. Yes, third time the charm. Don't. I think this is just fantastic. Hopefully, this is not a preview of what the week's going to bring. Again, I did get the weekly sector overview also recorded. It had problems getting that posted, so it's going to have to be posted after this live stream. So we shall see. Hey, Gary. Hey, Patrick. Tech gremlins running rampant. Yes, they are running rampant. Yay. Amazon 20% down. PM is... Well, Amazon's bounced back pretty substantially. Is Costco or Walmart next? I have to do the analysis on them. So we shall see. You're addicted to this channel. Well, there are worse things to be addicted to. Is this the new live stream? Well, it's the third try at the Sunday afternoon live stream. Excuse me, after tech challenges. What does Bob do on a Sunday afternoon? You'll have to ask Bob. Bob does not come on this live stream. Bob's probably got better things to do. I, unfortunately, am sitting here all day doing work and prepping for the markets. So, Waka Waka, thank you. Connor, hello. Mike having is tech issues on a sign for a markets tanking this week into oblivion. Oh boy. Or at least the things are normal with Waka being bearish. Targets on end phase? Really? Remind me after we get through the market. Let's see. Gonna blow 2,000 pounds worth of fireworks when the penny drops that there is no pivot. Now we got, again, what does, all right, are we on the same page with what pivot means? Pivot means an about face. Pivot means actually cutting rates. I want to just get that out there for anybody who's going to put in a comment. A slowdown is not a pivot, and they're not going to slow down this hike. So, Sashi, thank you very much for the super chat. Thank you for supporting the channel even with the tech issues. I really appreciate that. Everybody give a shout out to Sashi, please. I'll go along the dollar. That's not, I think we'll get another recovery trade in a dollar. So, all right. This was pause. Are you trying to get me going, Gary? We should, at this point, we should temporarily remove it because everybody says now the pivot is only a 50 basis point hike, possibly in December. That's not pivoting. That's a slow of pace. Just look up could somebody put in the definition of pivot into the chat, please? Please. Just put the official definition. Go with the Oxford Dictionary. Fine. Please. I just want to, let's get everybody, I'm so tired of people misusing words. They do mean things. So, very busy week coming up. I don't even want to ask for subscribers because I've had tech issues and probably somebody's already aggravated who's tuning in for the first time. But if you'd like, please give us a chance. We don't normally have this many tech issues, especially on a Sunday, but you know what? It is Halloween tomorrow. Happy Halloween. Yay. Okay, other camera. Where do we sit? Amadeus. The Fed doesn't need to pivot. They can just sound less hawkish with weakening job outnumbered. The market can rally on that. But they haven't even, I mean, you had everything was off the Timoros article. And by the way, there was another article out this weekend. Cash-rich consumers could mean higher interest rates for longer. Nick Timoros. Okay. So is this like, all right, giving the market's way too ahead of themselves? Maybe we should have a proxy for the Fed speak through the Wall Street Journal. Maybe just because what does this mean now? Higher interest rates for longer? Does that just mean that they're longer pause? I don't know anymore. I don't know anymore. I got to follow the price action. So where do we sit? Yeah, pivot means to turn or rotate. Again, a turn would not be a pause is a pause. A turn would be to pivot around, and which would be to cut, which historically is what the pivot's been. Is the Fed going to pivot? And if you're cutting, a pivot would be to raise. A pause would be, okay, we're done cutting, we're pausing. A pivot would be to raise rates. So, thank you. Pivot means to change from quantitative tightening to quantitative easing. Right, that is a pivot. They could say we're pausing quantitative tightening. A pivot would be to go back to quantitative easing. A pivot is not from a 75 to 50 basis point hike. All right, I beat that to death. Yeah, and I agree. If they did pivot inflation, I don't. Again, this is the whole problem. We got a bunch of armchair quarterbacks trying to say everything about the market. Well, let's just get rid of the Fed, and then we can just let the market speak for itself. We don't need to try to micromanage the market. All right, so tomorrow, happy Halloween. Chicago PMI coming in at 8:45, 15 minutes after the market. And Dallas Fed coming in at 9:30 Central. Everything I do here is on Central Time. So that's an hour after the open. Very minor day tomorrow in terms of financial reports. November 1st, we have ISM manufacturing forecast to be in contraction. That is potentially market moving, but is good bad, is bad good? I think it just depends on how much. If it does come in contraction, it comes in. But that's coming out 30 minutes after the open. The more minor, the more small, the medium-sized firms, S&P Global Manufacturing PMI, also forecasting contraction, and they have been traditionally doing worse because the larger firms have been holding up better. So that's 15 minutes after the open. So pay attention to that. Also, do not ignore the prices still forecast in expansion. So that's what we have on Tuesday. Then we have Dallas Fed Services and Fed Services revenue at 1 hour after the open. Wednesday, the big day. And no, not because of ADP employment change or the oil numbers coming out. Wednesday, this interest rate decision is pretty much baked in, even though the Fed Watch tool keeps, now I have to redo all this. Hold on one second. Hold on one second. Oh boy. Well, ever since I rebooted, one quick little second. It's just gonna be one of those days. And no, I'm not gonna sing all day. All right, that's working. That's working. Okay. So we have the Fed Watch tool, which is back to 81.3% on the 75, but that 75 is just pretty much baked in. They would literally, if they went 50 this go around, would shock the markets, and you'd see a substantial rally. What the? So now the big thing is not going to be a rate hike decision unless they came in 50, which is not really on the radar screen truly. The press conference is going to be the big thing. Remember, that's 30 minutes after the hike. That's going to be the big thing with how it's positioned for December, because December is the last hike of this year, and there is no hike in January. there's no rate. I should say there's no rate decision in January. So that's going to be critical. Then Thursday, you have ISM non-manufacturing still in expansion. The only thing I think that would shock the markets there is a very big contraction there, but that's after the rate hike, and that would probably, if that was a very big contraction, start laying the groundwork for just the 50 basis point hike in December. And you have the S&P services PMI. That has been in contraction. Last was 49.3, forecast 46. So the small to medium firms, or smaller to more medium firms, have already been in contraction. The larger ones, not yet. Then Friday, another big day. Non-farm payrolls, 1 hour before the open, unless that's a huge disaster. Not expecting much of it. A forecast unemployment rate headline number ticking up just a bit. Remember, the devil's really in the details in this. So it's really diving in. We can make a quick little snap decision based off the numbers that come out, but it's really diving into what the numbers behind that feed into the unemployment rates in the different sectors are really telling us. So that's where we sit. Let's are we going to blow off top? I think based off the Dow, we might have already gone in here. Now remember, tomorrow is month end. Here was your Friday performance, just as a wrap. I mean, Amazon, which was down like 20%, bounced back substantially. Here was your 1 week performance. Look at that. I mean, a pretty decent week. Besides, you have Meta. Meta did not have a decent week. Still, that did not bounce. Not any bullish bounce for Meta. I mean, Amazon still finished down 13% on a week. Still a pretty big disaster week. Google down 4.8. Microsoft only down 2.5. Apple, I didn't take that report as that bullish, but Apple, it was a mad rush into Apple on Friday. I'll put up again the weekly sector overview. Once this is done, you can always watch it tomorrow morning too if you're overseas and need to get to bed. But based off of Friday, all the sectors except basic materials were strong and really consumer cyclical. I already went over Fed Watch. They're not updating the this aspect anymore, so I have to show it tomorrow morning. And we are in, let's see if this comes up, in greed mode. So anywhere up in here. Why up in here and not extreme greed? Because up in here in a bear market, we start watching for a rollover play. Current market valuations, based off the major ones I watch, your yield curve value majorly overvalued. Why did I scroll? Buffett indicator. They say fairly valued, but this is almost tipping into overvalued, greater than one standard deviation. PE ratio is still overvalued. This is just, I don't like this one at all. Margin debt. Yeah, margin's been unwinding, but I think this is skewed to a downside bias. But more or so, I think we're up more so overvalued again. However, we trade the technical patterns. Hey, CMG's up, Chipotle. By the way, I'm going to be introducing a new stock roadmap feature. Chipotle is going to be the first one I do. Sort of my technical short-term to medium-term plus my fundamental and potential longer-term roadmap thing. Should you be trading, swing trading Chipotle? Should you be investing in Chipotle based off of not only technicals but fundamentals? Gonna start rolling that out. So when you do see that, if you'd please watch it and give me your thoughts on it. All right. So let's see here. We had a very strong up day on Friday, huge day up on Friday, coming in, hitting the first target for this head and shoulders. A bit sloppy, but first target there. Next targets, remember month end is tomorrow, so we could still get some window dressing, and I don't have any topping pattern. There isn't any topping pattern, even you go down to a 5-minute chart. All right? There is nothing. So, based off the official close, we did not close above the 62.5. So still keeping an eye out for that. Tomorrow, on any rally, I'm watching 39.47 to 39.50. If we got another rip your face off rally, 39.85. My key support is about 38.65, at least for overnight going into tomorrow morning. We are overextended. I will be watching the 4-hour rotation zone rising into that area. More aggressive would be just a simple pullback into the 1-hour rotation zone, which is sitting at 38.90. We are incredibly overbought with the price action. Daily cycles are still trying to roll over, and on the daily RSI model is in overbought. So weekly still moving up. I was watching for some kind of rollover play and then a resumption. We have not had the daily rollover play yet. We have tapped the other side of the weekly rotation zone. Now, longer term, after we get at least a pause, I'm focused on 40.59 area with the declining 50 on the weekly basis. I also took a quick look at the overall patterns in the sector overview. So that's what I am looking at. The only thing that puts me in more short-term bearish mode is, besides a pullback, is if we get a close back below 37.57.50, and then that would be bigger pullback area. We should still be seeing a higher push based off of Elliott wave also before another potential rollover. When do I adjust the retracement levels on the daily? Bounce on 12.5 and close at the 25 from June low to January high. When do I daily June low to January high? I'm not understanding you, Connor. I adjust, well, the retracements, I will ratchet this up once we get above the 87.5 to the next level, but I will glance at where the 62.5. From projections now, on the next sell-off move, I'm going to be using the highs from August to the lows in October. And for if you were doing reverse, there would be, see, you're talking about January from here. I don't know which dates. You got to give me more specific than trying to decipher something during a live stream. All right, NASDAQ. NASDAQ, the weaker, by the way, this is not even in double, it's in double top territory, but it's not a double top because it's not reversing enough of a move. Remember, on a bearish move, the NASDAQ's the first one I look to for bearish plays, the Dow or the S&P for bullish plays. Tomorrow, I'm watching for 11,700 retest there. The first target on the head and shoulders, which is not well formed, but we can still use the target areas, is 11,850 and then 11,885 area. So those are my upside targets, but would not be surprised tomorrow if we are all bullish mode to retest this 50 area, which would be the third chip away at it. The key support, remember, there's no reversal pattern just here. We have filled the gap. There's no reversal, so I need to rely, if we're going to get reversal patterns, I need to rely on overnight price action tonight. So my first level support is about 11,524, and then major support coming in about 11,420. Cycle still rolling down on the daily basis, and the weekly still turning up. Remember, the other side of the weekly rotation zone, which we could still see after a pullback or pause, is about 12,100 area. 12,076 to be a little more precise. Dow, which have been on an absolute rip your face off move. This is like the bottom is in. We had that double bottom, and then the pattern has just continued. The next key area I am watching, the next major, since it closed above this, 32,142, which even after a pullback, we should see some higher prices also in the Dow. The next major target area I'm watching is 33,758. Back also above the daily 200. Now, very, very overextended. Very overextended. My key support coming back in at 32,450. But pretty much the same thing. Now, again, no topping pattern. We'll need overnight price action for topping patterns. Russell hitting the first target on the reversal pattern. Next target is 1883. Key support coming in at 1831. Those are the two numbers I'm using there. With elections around the corner, will Fed shock the market to upside on Wednesday? I think they're just doing 75 basis points, and it's all going to be what they state in the presser. You know what's ironic is these kind of rallies loosen up financial conditions. So it's for the people who want the pause sooner or the pivot sooner, this is counterproductive. Why? They can lean into these kind of moves stronger from just even the stock market and the liquidity principles. I don't think they're going to have an issue with the elections. So, good evening, Anissa. If you want bullish stock, then you should chase stocks in bullish trend. At this point, yeah, I'd be more sticking with things that are trending. I would not be trying to buy a meta right here. You're better to still pick with stuff that's in a bullish trend. Now, if you get a double bottom play against a good stock that has had an earnings sell-off or something, it's still playable, but that's with a limited upside because you have your targets. If you're trying to ride something, I'd go with something that is running with the market and in market or outperformance mode. DAX almost to the final target, so that's this 13,414 to 13,431. Notes. After stalling out at the 111.28 to 112 area and the pullback here, this is at a very key area. Again, I'm watching the Friday was an inside day. I'm watching Thursday's high or Thursday's low for either the breakout or breakdown play. Cycles are at the top on the daily, so I'm watching more so for a rollover play, also coming out of close to overbought position. Other than that, long term, there is no bullish play just yet. Dollar index, again, did not trigger the double on the weekly. Triggered on the daily and then the bounce back. But I'm still inclined to watch for unless I mean, anywhere unless we really start breaking this 109.20, I'm still leaning to short-term bullish mode. If we break this, then we will probably trigger the weekly, and then it's got to go against the slightly lower probabilities. But the weekly rotation zone is well in front of the first target. Crude. Let me just pull this off. Watching for to continue rotation back up after the 4-hour rotation zone. We've already hit the first target on the double. Next one is 90.52, 91.65. Energy sector still in very bullish mode. Let's get through a couple other things. The yen, watching for a potential breakout play. Again, this is a pretty substantial bounce back on Friday. Unless there's yen intervention, I'm watching for a return to target this 149.40 area again. Euro, we triggered the double bottom. So as long as the this 97 area holds on a closing basis, it's still potentially in a short-term bullish mode. The pound is still holding up. Breakout, pause, rotation back up. So above this 116.50, the targets are rough 117.80 to about 118.20. Bitcoin, you got the breakout, the retest, the rotation back up, still stalling out here. This is interesting because we've had this 20,835 level, which has not been able to get the daily close above it. And now there's a little potential double top. Still favoring the breakout play unless we get the daily close back below 20,000 exactly. The daily close back below 20,000 would probably then turn into, if it broke the other side and gets through even the midpoint, could turn into a shake and bake play. Be on the lookout for this. Why? Because everybody who bought this breakout that stalled at this key resistance area would be wrong. Let's put it that way. Now, I'm still with the rising rotation zone, still favoring some continued price action unless we triggered a double. Tesla, which you have to confirm but not yet triggered double on the daily. Need a daily close above 229.82. So that's where that sits. 242.65, 249 roughly with the declining 50, and that would be my major target. Interesting enough, the final target, this 255, comes in right at the key gap open before the potential bounce back. Now, I needs to get that daily close to really solidify it with cycles at the top. The stop level for that is on a closing basis below 210.30 on a daily closing basis. All right, what other question? Oh, for earnings? Oh, see, that's what I missed. Because when I rebooted, it got closed down. All right, let's go over this. Tomorrow before the open, not much. Not much market moving. Not much that's gonna really rock the market. So it's just unless you're in any of these, there you go. After the close tomorrow, not a lot from my perspective. Be interesting to see what Avis is from a travel perspective. I'm too tired to cover a Goodyear. That's not much. Tuesday before the open, from an interesting perspective, it's SoFi, but not from a market moving perspective. Pfizer will be interesting. British Petroleum, remember, Chevron, Exxon both beat. British Petroleum and Marathon should be still beats unless they really screwed something up, and also Phillips 66. So you got some energy coming Tuesday before the market. After the close, pay attention to AMD. I gave my sector thoughts. I got to glance in a little more at some numbers on AMD, and we can look maybe tomorrow at any patterns on AMD. I'm looking at Airbnb just from a consumer and travel perspective. That's about it, not from an investment perspective. You got Chesapeake Energy also. Wednesday, going to keep an eye on CVS Health. I'll glance at Generac because I do have a Generac whole home generator, although their accounting is very strange, especially when it comes to some of their solar things. So that's about it. Before the open, after the close. Roku, can we just get rid of that at this point? Qualcomm, I will be looking at that. Robinhood, just go away. Etsy, what else do we have? Thursday, Peloton, can we just go down even lower, but maybe it'll get bought out? What else? We got ConocoPhillips. Thursday after close, PayPal reintroducing their language that they'll fine you if they don't agree with something you do for $2,500 after I said that was a mistake, and then they snuck it back in. Long term, I'll probably do a video on PayPal too for a stock roadmap for that. But guess what? It's not good. Starbucks. And then Friday, my streaming provider, Fubo. And that's really it besides some minor energy things. So still an interesting week with earnings. Some things that used to be some fun plays during the rah-rah years with 0% interest rates aren't so interesting right now. So, let's see. Now I got to scroll through. Again, I'm scrolling back by Sashi. Thank you so much for the super chat. Really appreciate it. Now, let me get back to see what else there was in here. Remember, if you want me to look at something, you gotta put a question mark so I can find it quickly, especially when comments are like the NVIDIA. This is just a short-term play. It's not a great long-term play. This is just a counter trend rally, overbought, cycles rolling over. I'm watching to see how it reacts on a pullback to about 129.50. Overall, the sector is not in a great position. NVIDIA from a fundamental standpoint don't like, but on a breakout play above 139.75, we still have this gap left behind, which has not been filled. And the technical gap fill is to 145.05. We got 144.33 harmonics. So on a continued rally, it did chip away and get above the 50. From a longer term perspective, even a rally, this is the major breakdown zone. Back at between your about 145 and 150 area. You have the weekly rotation zone at 152. Harmonics coming in at 148.50, and the 62.5 level that was broken before coming in there. So there's major, anything to the bullish side, you're running into substantial resistance right around 150. Yes, it can have a little more run to the upside. So from a bullet, if you've been buying some of this and on this little run up, I'd be, from my perspective, moving stops up. You have a little upside, maybe about 10 to 12 more points. Should it not trade below about 120. But minor resistance on just a normal pullback is sitting about 129.25 to 127.25. So that would be a normal pullback zone. Early warning sign, you get a close below 127. Not good. Then that pullback could turn into a much bigger pullback. Let's just glance at AMD while I'm at it here. AMD, remember earnings. There is no great bottoming play here. It is trying to break out of a sloppy horizontal channel. The only short-term play would be a break to the upside above this multiple topping area, which you finally got the 4-hour close right into here. This is a clear path move. Stop reduction target. You don't even need to do harmonics on this. But your stop reduction target, I'd be using about 64. You get a close, and I don't need to even use gap harmonics on here. You get a close above 64.38, which would also take you above the 50, would be the gap fill play with earnings. Everything into this would be a corrective play, and even on a stronger move up, this is a clear path move on the weekly, there is major overhead resistance at 72. So consider that with the reward to risk models. If there's a low entry setup like on that breakout play on the daily, because that could be with a stop below this 58.50 area. It's nice sideways base after a new breakout high right here. Sideways basing. So this could potentially target, you not only have the gap fill play, but we could target the 87.5 area and a return to possibly that 50 exponential on the daily. But the major areas that, again, 71.70. Where does that play here? I'd probably revise that down just in front of it at about 70 bucks. So easily reward to risk for a breakout play to the upside. Other than that, nothing. But if this, without that breakout play, gets that close back below 58.50 early in the week, I'd watch out with earnings. There's AMD, Disney, not related to semiconductors. Semiconductors, I mean, what's semiconductors? Jeez. Disney back on the Friday the 21st. Close into a clear path move. The full target to that clear path is about 108.28. No, this was not a double bottom, but it was a divergence off of cycle bottoms with the buy pattern happening on the 13th. So the first key reversal was on the 13th. The second, confirming into this clear path, was on the 21st. And now it's trailing higher into a remaining clear path move. Looking at Disney, remember, also is a sympathy move with Netflix. Key area you also see is the 50% harmonic. Let me take off some of these longer term levels since we did hit that 87.5 already. Key resistance in the short term for any stops, especially going into before the Fed meeting, this 108.28 to 108.60. That's the 50% retracement of this down move. From a trailing basis, you get a close above this 50%. You still have a gap left behind. Then the next key area where I'd use for another major stop reduction besides using the gap fill left behind would be 113.07 on a continued bullish play. So this could it pull back before that? Yes. We have now significant support at 101.40. Rising rotation zone, previous resistance, close above that resistance, verified with another close, even though on a pullback day with a close above that level, and then the breakaway. Now your bottom of the rotation zone is supportive of that level. So on any pullback, that's the key support you don't want to see broken on a closing basis. Now, beyond the gap fill to the upside, next target area 113. Why? I get a close above 113.07. My target would be the 117.50 area with the declining 200 to reset the 200 move. It hasn't visited the 200. It's technically not hit it again since September of 21. It came close in November of 21. Since then, it's been trading below the 200. That would be a nice 200 SMA reset pattern. Would not be surprised to see it before the end of the year, if not before 8th of November earnings. If the market does not trash anything through the Fed move and through non-farm payrolls, we could easily see this level obtained prior to earnings on so stronger push higher. But that would be key. If it does not get there before earnings, that would be a target for an upside into earnings. Keep in mind, overbought on a short-term basis in cycles at the top, so we would not be surprised, and tapping the other side of the rotation zone. Would not be surprised to see the pullback play before the next significant push up. So, hold on. Between recording and speaking all afternoon and tech problems, I'm running out. I see NASDAQ buying, but it will pull back first. I am in agreement with it. We should be poised for a pullback that still holds, and then we get another rally push up. And as people know, I think the overall fourth quarter rally will personally peter out sooner than expected, but I will be more watching for it to peter out closer to the end of November / beginning of December. We still have technical upside targets to hit. Things have got a little ahead of itself. Now, Airbnb. I just want to double check something here. Yep. Is there a great pattern going in? Let's just see where this, let's see if there's any upside left on this. I know. Just looking at a bunch of stuff here. Sorry, I went silent for a while. Technically, we should still see some more upside. Technically, still some more potential upside. Remember, earnings on the 1st. This is more based off the conservative targets for the double that's already played out. Yes, some more minor upside to this. If earnings is a beat, your pretty much target is the highs back from the middle of September with the 200. Your target area would be 125.67 to 129 based off the close above the 62.5. but your short-term patterns have played out. So that's your cycles at the bottom. This is sort of in no man's land. I'd have to look at the options to see what the projected play range is for earnings. I have not gone to do any earnings analysis yet on this. So I don't have a bias one way or another. From a longer term perspective, it's pretty much in neutral mode. Your key thing, now long term, I'm bearish. If it did pop up here between the September highs and this breakdown zone, I'd be looking for potential short plays. So that would be a gift on a play up here. Other than that, there's just not much. It would be a gamble play going into earnings with a slight upside bias. That just keeps running. Just keeps running higher. There's no pausing bar yet. And it already hit its next target of 394.36. You got, when we earnings on the first, I'd be watching for a potential pullback here. A pullback, what is your next, if you have to go out farther, I got to look at this on a weekly for your next key target area. See, this, I hate doing projections this far out, but we don't have a pausing bar. See, that was that one. So you're already in the window. So again, 394 to 398 is your key target short-term area going in with earnings. Your next key, and why did I choose this level for people trying to use harmonics? Remember we used the short and the long. This is a long projection, and this was the last return to my weekly rotation zone. See, pullback is why we watch weekly rotation zones. Then we got up here, first target area, 369.17, pause there, pull back, weekly rotation zones. So now I know this is a target area. I can technically raise this because this is the most recent pullback. I wanted to see where the last cluster was. So if it knocks something out of the park and you're trailing here because there's no top signal yet, it's entering a topping area. Going into earnings, the targets I'd be using would be 408.86, and then if something mind-blowing happens through the end of this quarter, 442.50. And that does not in a straight line. Weekly, you're in overbought condition. Last overbought condition, you return to the weekly rotation zone. Weekly cycles getting to a top. This overbought condition with divergences return to the weekly rotation zone. Could that easily happen again? Yes. So where would be the key areas you'd be looking for a pullback to? 363 to 344. Other than that, depending on your time frame, you'd be trailing a stop. Especially remember with that short-term topping area here, but no topping pattern yet. See, there's no topping pattern yet. So the only thing I can do in these circumstances is to trail a stop. And depending on your time frame and duration of trade would be where the stops would be. Super aggressive stop would be below 384.79. Depending on a very short duration, a more conservative stop would have to go below about this 367. And if I'm in a long-term hold, on a closing basis, unless it were to close back below about 347, I wouldn't be worried about it. And you can even see here, Why do I talk durations? And this is, I don't care if you trade the stock or not. This is some teaching methodology. Why do I watch something like a weekly rotation zone? And I love buy signals in a weekly patterns. For example, this was not only a rotation buy, but also a modified percent B buy. So you buy here. And remember when we had those levels, your next target area was 369. I like to take something off and then raise stops. Why do I show that? Because, again, when you get to a topping area with overbought on the RSI and cycles at the top on the weekly, which is where we're getting to again, I start watching for topping patterns. Now, does this mean it has to top just yet? No, that's why I like to take something off or at least move up stops. On the next pullback, what do you think I'm watching for? Because here was your next buy signal. That was not a buy signal. It was just a rotation up on this one. So it was back on the October 10th. And then since that time, it's come up and hit our next target cluster. So it's either take something off and or move up stops. Hey, options 22. Hey, Rod, thank you. It looks like you've been watching for the last couple weeks, and just want to say I appreciate your hard work and hope to see more in the future. Well, I'm here 6 days a week. Thank you. I hope you've also subscribed, Rod. And thank you very much. A new viewer, already a supporter of the channel. Thank you. Could everybody give a shout out to Rod, please? Who's here? Please give a shout out to somebody, a new person supporting the channel. They say, who's they? I guess I could look up some fundamental projections. Don't say analysts. I mean, I'd be using my projections versus anything else because they're much more accurate than just analysts. But there is some more upside. And what's the time frame for they say it'll hit 421? Hey, Alan. So you got my targets. Again, now your key support, even with the rising, is here. So thank you for the shouting out for Rod. Hey, Anissa. So, all right. Let me just get through a couple. Then I got to wrap it up for today. Thoughts on LMT? Boy, you're going to have to ask some more of these maybe tomorrow. Thoughts on LMT at this point? Lockheed Martin. Lockheed Martin I would be watching for the pullback at this point from the breakout play. And my key, this would be off a key support zone. Why? It's very overbought. There's so much stuff. It was, this last move up was literally like the end of the world was coming, like the last chance you were going to get to buy things. I'm watching for a pullback and some kind of consolidation play near these highs. You can see your daily rotation zone very overextended. My key support area would be roughly between about 461 to 471. I mean, this has gone super ballistic at this point. Let's just do, this is another great area for your reverse harmonics. Closing in on the 493 harmonic level, then 506. So in this part, let's just check the dailies. I mean, from my perspective, it's move up stops. There's no new entry, or I'd wait for pullbacks of cycles to get closer to the bottom on the daily and find some support if you're not already in it, in this support zone. Because chasing something at this, especially this close to that 493 harmonic area with this overbought is very, very risky. If it starts breaking below 461, the next area I'd watch for key support to come in would be roughly around this 37.5 harmonic, about 447 to 450. So LMT has a gap below 460. A gap below. There's a little minor. There's a couple little minor gaps in here, but that's right back to the support zone. Like this gap was filled. There's a little gap still left here, but that's minor. I'd just be focusing on this area with a rising rotation zone. All right. Hey, Raj, give me some more of these tomorrow. We've gone on with the delayed start nearly an hour. And I have to, the dogs are getting anxious. Again, big shout out to the supporter of the channels. Rod, new viewer here. Thank you so much for that super chat. And from earlier, we got Sashi. Thank you so much for your super chat. Everyone have a great evening. Tune back in tomorrow morning. We don't have a lot on the financial release front or on earnings tomorrow, but hopefully we will get some overnight price action patterns to help us fine-tune our trading, not just for tomorrow, but going into Fed Wednesday. With that, I will chat with everyone later. Have a fantastic rest of your day. Bye.